Welcome back to Tax Tips by the One-to-One Tax Advisor Group. Today, we'd like to have a conversation with you about audit protection and the 2021 tax filing deadlines. When we look at the 2021 tax filing deadlines, we're looking at the 2020 tax year, which needs to be filed in 2021. So in the income tax world, we always run a little bit behind schedule based off our reporting requirements. Before we get going into our tax tips and audit protecting yourself for the tax year, we want to take a look at 2020 and see exactly what happened. So if we take a look, in March 2020, COVID hit and there were a bunch of government announcements that came out. In those announcements, they came out and they announced the Canadian Emergency Response Benefit. That's a payment of $2,000 to people who lost their jobs due to COVID, and there was no withholding tax taken from it. They also came out with things like the Canadian Emergency Wage Subsidy and the Canadian Emergency Bank Account for businesses. Now, for businesses who took advantage of those programs due to loss of revenue or their staff and a whole assortment of other reasons, one of the things that those business owners need to understand is that the subsidies that they receive for the wage replacement is taxable as income to the companies. As well, out of the $40,000 loan that they were able to take last year, and then a $20,000 extension, out of that $40,000 loan, only $30,000 of it has to be repaid, which means that $10,000 has to be reported as income in the 2020 tax year. If they got the extra $20,000 loan before December 31st, they also have to add the extra $10,000 that's not repayable at that point in time. That all adds to the income from the companies, right? Last year, our tax deadline was extended to May 31st. Now, what a lot of people think it was extended to September 30th, and I need to talk about that because it is important to understand the dates. They only extended the tax filing deadline until May 31st. What they did for September 30th is they postponed or they waived all of the late filing penalties, providing you were filed by September 1st, but the deadline was still May 31st. Now, when we talk about this on the next slide, you're going to understand why this becomes important, right? This was all followed up with $400 billion in extra spending on the government's dime. Now, as much as you didn't get all of it and I didn't get all of it, it has a huge effect to every Canadian taxpayer going forward, and we're going to talk about that as well, right? Now, the one gleaming light out of this is most of it, a lot of Canadians, over 40% in April, had to work from home. And the government has come out with a couple of different methods on how you can claim some small home credits to help alleviate the tax bills that we're looking at. So when I talk about tax, so the question you have to ask yourself is, how is all of that information that I just gave you going to affect your 2020 tax return? And on this slide, I talk about the 2021 tax deadlines. And this becomes very important to understand. So first of all of the federal and provincial subsidy payments that you receive will create a tax bill. So again, when we talk about Manitoba, if you received a 1-month CERB payment at 25.8%, which is our lowest marginal tax rate, so the minimum tax you're going to owe on that is $516. If you claim that for 4 months, that totals up to $2,064 that you're going to owe. Okay? Now, if you work from home, there are some new tax credits that you can claim that will offset that, but it's not going to be anywhere near the $2,000 we're talking about. Under the simplified method, the maximum you're allowed to claim is a $400 credit, which at that point would save you, $100 to $200 in tax. Now, from what Revenue Canada has been announcing and what we're hearing is that we're not expecting to see any filing deadline extensions. So we can expect that taxes are going to be due April 30th. COVID's been around for a year. I think that they kind of expect that people have gotten used to it and will be getting things done on time. Now, what that means is that your tax returns and your tax bills are due on April 30th of the year. Now, I'm not sure if you're aware of what happens. For the most part, Canadians get it. Last year the average tax refund was $1,678. So Canadians are used to getting money back. With all of these benefits that are coming up for the provincial and federal subsidies, there's huge tax that could be owed on that. So the tax bills being due on April 30th become a problem for late filing. When we look at late filing penalties, if you're a first-time offender, start at 5% the first day that they're late. So if you don't file your tax returns until May 1st, automatically there's a 5% penalty. Now, what does that 5% penalty work out to? If you collected CERB for 4 months, that penalty is $103, right? Plus, they're going to charge you an extra 1% a month. So if you wait until June 1st, there's going to be another $20 added. July 1st, another $20. So they keep on adding on these penalties, 1% for every month that you're late. Plus, they'll charge you interest on the money that you owe. So that leads to a situation where people are afraid to file their taxes because they owe money. The problem is, owing the money is not the issue. The late filing becomes a huge issue on top of it, which just adds to the problem. Now, the reason why I talked about last year and the difference between May and September is this. If you filed after the end of May, your tax return was considered late. Although they waived all the penalties, the filing deadline was still the end of May. What that means is if you filed after May last year, even though you weren't penalized, and even if you got money back, you're now a repeat offender. The way Revenue Canada works is if you file late more than once in the last 3 years, they increase those penalties and they double them. So if you filed after May 31st, you're considered a second-time offender and you're going to have a 10% penalty on day one, which is $206. And then you're going to be charged $40 a month in late filing penalties, plus interest again. So it becomes very, very important that we're meeting that April 30th deadline this year. Even if you don't have the money to pay it, the interest is better than the penalties. Okay? Now, the other thing we can expect this year is going to be increased compliance. What do I mean by increased compliance? Well, the Canada Revenue Agency is going to need to try and collect the $400+ billion that we spent last year. So what that means is that they're going to be increasing the audits on all types of expenses. So those home expenses you're able to claim, the vehicle expenses you're able to claim, they're going to be auditing taxable benefits and any other types of tax deductions that you normally would take, right? They're going to be looking at industry reviews. They're going to be looking at service industry for people who receive tips. You know, 20 years ago, tips were all done in cash and the government was kind of helpless to try to determine how much a person should be paying. Nowadays, everything's done through debit and credit card. The employers are paying it out, and the tips is low-lying fruit for the government to grab. So you need to be aware of that and make sure you're reporting your tips correctly, right? Also, people in the transportation industry, you know, the government increased the amount of their daily meals by 36% this year. However, that was the federal government who did it. The Canada Revenue Agency's responsibility is to make sure that you can validate and prove those meal expenses, right? There's going to be more tax reviews. We're looking at more pre or post assessment tax reviews. A tax review is not an audit. What it is it's the government doing matching on your tax slips and then verifying that you were actually entitled. So when they do a tax review, they may be asking for copies of all your medical receipts, all your child care receipts, and everything else. That means, you know, so they're going to be stepping up that process. So we're going to be busier as tax preparers, and taxpayers are going to be busier answering to Revenue Canada after the fact. And if you don't answer to them, they eliminate all those expenses and they send you another tax bill, right? Once they do that, they automatically assign you into collections. After 90 days, the government can start taking collection actions, which includes garnishing wages, seizure of bank accounts, seizures of homes and mortgages. So depending on how bad it is, you really need to be careful and make sure that you're dealing with things. And we don't want to exasperate the issue by late filing. Now, how can we fix this up? What can we do? Well, you know what? The best thing to do as a taxpayer is to prepare well in advance. We want to take advantage of all the available tax deductions and credits that we're entitled to, right? Which means that we need to save all the documents and all the receipts that we get. Saving them electronically is perfectly safe and acceptable by the Revenue Canada, and it safeguards them from getting lost, from getting weathered where you can't read the receipts, and everything else. So saving your stuff electronically is a huge benefit nowadays of what we have. When you have expenses, you want to make sure that you're identifying notes onto the reason why. Now, for, you know, some expenses are self-explanatory. You know, I had medical expenses, but if you're claiming a trip to the doctor, for example, you need to make sure you're documenting what doctor you went to, the fact that there's no doctor within 40 kilometers, who went with you, so that you can claim the correct meals and everything else. So we want to make sure that all that stuff is documented when you file. 2 years, 3 years down the road, when Revenue Canada audits you, you're not going to remember the same way you do right now. The other way that that we recommend preparing in advance is to find a professional that's going to help you with this. You want to find somebody who's going to ensure that your original tax filing is correct and there's no problems. If there's some risks, they're going to explain them to you, so you're well aware as to what's happened and what could happen if there's an issue, right? And you also want to find somebody who's going to be there when the government calls. A lot of tax preparers, right, they will file your taxes, but they're not there to support you. They're not trained to deal with Revenue Canada. They're not a tax advisor. They are a tax professional. They are a tax preparer. They know how to enter numbers into a software and tell you what the end result is. So these are the things that you need to look at as Canadians in order to prepare for this year's tax return. Now, how can we help? Well, at the One-to-One Tax Advisor Group, you know what? We're here. We're here to support you. We call them virtual tax advisors, but we're all real people. There's real people on the other end that you can pick up and talk to and that will support you. We're not a robotic tax advising company. We're not a file on your own. We are here to support you, right? How do we do that? Well, number one, the introduction of the new one-to-one mobile tax app, right? This app, just look at the way we built this thing, right? Number one, we capture all of your information. When you take the TaxMax quiz, we are looking for every tax credit and every tax deduction that you can get. And we're documenting at the same time as to why you have those expenses. That's all built into the questionnaire. Then we allow you to take pictures to upload all this stuff to us so you don't have to come and see us. Well, guess what? That stuff is stored and available for you and us for 7 years. So now we're saving all copies of all of your receipts and we're documenting them properly as we go along. We're giving you an at-a-glance video review, and that video review will explain to you what we're doing, what the risks are, and what you can expect to determine if you actually want to make those claims or not. At the same time, you know what? It allows for the e-signature, which is a convenience issue. And as I said before, all of your tax information is available for 7 years. Your tax returns, your tax receipts, the questionnaires, exactly what's happened. So we're here to support you when something happens with that claim. We don't run away. We take on Revenue Canada head on to make sure that you're getting what you paid for. So how do we get started on this? You know what? The One-to-One Tax app should be out in the store, in Google Play and the Apple Store any day now. You want to download it on Google Play or the Apple Store. Like I said, we've streamlined our annual registration and our tax stuff holds 7 years worth of tax data at your fingertips. So look for us online. Reach out to us. We're available at one-to-one-tax.com, and we can help you out, get through this tax season, and make sure that there's nothing to worry about afterwards. Anyways, thanks for tuning in to our tax tip. We have lots more for you to take a look at. Please check us out. Any questions, let us know. Thanks a lot, guys. Bye now.